Hi, welcome to Pauline Young's channel. Before we begin, don't forget to click the like and the subscribe buttons.
Which candlestick you see? Is it bullish or bearish?
Going down, bearish.
Which one?
This one, the three back close.
But actually there is also another shooting star and also hanging man.
Shooting star. This one.
That is a shooting star. But at the same time, you also see another small hanging man today candlestick. The last candlestick.
Last one, this one, the red one.
Yeah, because you saw the green bar that shot up, and then when it shot up, there's a long tail on top. That means selling pressure. So then you see some selling pressure. Then you have the 3 down days. And today there is like a support lah because there's a long tail. But however, because this one is looking at more on the top position, so I see this as a hanging man. However, the overall position is still on the low side, but then still you saw a big green bar and then followed by this bearish sign. So in fact, it is a bearish sign. It's not a bullish sign, it's a bearish sign. So the next 3 days most likely will be bearish, but however, there is a support there at the 20 days. So the tail of it today, the tail touches the blue line. So this is a sign that this stock, it is supported by the moving average line. So you have negative and positive in chart here. So we have to weigh, do you have more negative or more positive, and then you have to weigh. Sometimes you can't see a big clear winner, you just avoid first because it is unclear. So there are so many chart out there, you can go and look for a clear signal, then you enter. This one is 50-50.
Let's say I change to longer term.
You should look at 20 and 200 will do because too many lines will confuse you. So you just look at 20 and 200 will do.
So in that case, so when it comes to here, what do you call it? It already crossed here. So what happened if, let's say, the buyer bought, and then after that, when it comes to the 3 down candlestick, then we quickly have to sell already.
Yeah, actually, another way of looking at this is that you look at this big green bar to measure the height of it. The minute when you see the price drop half of this line here, you have to sell already. So what I mean is that I draw you a line. Let's say I have the green bar is from let's say 5 ringgit to 5.50. Okay, 50 cents bar. So then the next day, then it will continue to go up and then come down. So I will have to see that this one 525 here, 525. The next day should not cross below the 525. Should not. The minute if I see that it is below this previous half of it, I will sell. This one is trading. That means you have to go for the intraday trading. You only when you continue to buy is when the next day it start at above this level. If next day it start at have to be above this level, any level here will be good. The price must not drop below the 50% of the previous candlestick. If it drop below 50%, that means the whole trend is weakened. Then you have to sell already. Otherwise, if it's always maintaining at above here, you just hold on to it. It will bounce and off. It will be up and down, but it will be on the way up. But once it cross below here, no need to think so much. Just sell. So this is like an intraday operation. So if you are into intraday, so this is one technique, protect your position.
So if for long term, then we have to look GMMA.
That one is for long term. It's like a long term investor. Then only you look at GMMA. So meaning that sometimes if you look at GMMA, you may not be buying at the bottom. If you notice, GMMA breakout will never be at the bottom. Then what will give you a bottom? RSI can only give you a bottom. If you want to fish the bottom, the RSI can give you the bottom. But if it's in a downtrend, the bottom can be bottom lower and lower because it is a downtrend. But nevertheless, RSI can give you a bottom. If you are looking for whether I want to buy at the bottom or I want to buy at a clear signal. If it's a clear signal, then GMMA will be better. If it's you want to go for lowest price, then RSI will be better.
But sometimes RSI, when I see it, I got confused already. When it go lower than 30, then if let's say sometimes we were to buy and then it suddenly go down again.
That's why you have to wait for the RSI to turn up first. If it's still continue downtrend, right, you don't enter because it's still downtrend. It's like a big bullish candlestick overshadowing the previous day. So it's a reversal, right? Then, however, the next day you see a red color doji. So when you have one green and one red, this one is called bearish harami, not bullish harami. So with this bearish harami, the next day is a bearish red candlestick.
This is why you say must wait for 3 days, right?
No, it's not wait for 3 days, but then it will affect within the 3 days. Next day it will affect already. Then the next day it affect bearish. So after the bearish, today you see a green baby. So when you see this called bullish harami, because you have a green baby, so it's a bullish harami. So it's a bullish reversal. So in fact, based on this, tomorrow you can enter. But whether it is a cheat or not, you do not know.